Shut up and sit down.
All right, everybody, welcome back to Rebel Trading Group Podcast Episode 49. You know what day it is. It's Thursday, and it's still November 1st, 2018. Back-to-back episodes. We're trying to get them in so we can get episode 50 on a special episode for you guys. We're back again. My name is Nathan Oliphant, and with me, as always, is the gluten-free Jason Bessing. What is up, Jason? Welcome back.
Welcome back. It's been a while.
We're here. We are here. Munching on the munches.
Well, that's awesome, man. So, market is still going. I'm going to hit us with the numbers again. If you can give me just a quick second, I'm going to pull them back up. I just took them down. All right, pulling up the market watch. We have the Dow Jones. It is 10:51 a.m. Eastern Standard Time. Dow Jones up almost 200 points. S&P up 20 points. NASDAQ up 62 points. Gold up $20 on the day to $12.34. Oil still sitting at $65.05 a barrel.
Would you like your Bitcoin?
And Bitcoin trading at...
I got you. Don't worry.
Sorry, give me just a second.
63,
Unless you've got it right there.
1,009. No, I'm sorry. 6,390. No. Everybody's jumping. 63,000. I'm rich.
You there?
Yep. Yeah, I'm here. I'm here.
Oh,
I'm here.
Okay.
I'm
okay.
Here.
Yeah, just making sure. Okay, yeah. Bitcoin's sitting at 63.18. So small drop from what we saw her at.
I got 63.90.
Mere hour. Yeah. 63.90?
Yeah.
I got 63.20. Well, there you go. Whatever, however you want to take it, giggity. So what's going on today? Is there anything happening?
I don't know if anything's happening today.
I don't think there's much going on. Tonight or after market, we have Berkshire and Apple. I feel like eyes will be on that one. Some notable earnings. That's for sure.
For sure. Berkshire.
I don't really want to touch on news because we kind of did that for the day.
Yeah.
And like we said, there's not really much going on. It continues to be Trump's tariffs, tweets. We have the election coming up.
Oh, I got some news. Here, I'll just add this on.
You got a new one?
Yeah, I got a new one. I forgot to add on. Jobs reports are coming in tomorrow.
That'll be a big one.
Yeah, pay attention to that. The guy on the desk on Yahoo Finance was saying that he likes to see a good, especially how vulnerable the economy is right now. He likes to see a good, expected number. Nothing too high, nothing too low that'll scare the Federal Reserve into doing something. So, also there was a housing slow. Did I mention that last time?
No.
Housing sales have been sort of flatlining, and not huge growth. And I think that's a good start to a slowdown of an economy.
That's a good start. That's what you say? It's a good start?
It's a good indicator.
We know that most Americans' wealth is in their home on paper. It's not in their account. It's not in their Robinhood. It's the equity that they have in their home. So when housing markets slow down, just like stocks, when there's a fear in the housing market, there's a fear in the economy because that's where most of the money is backed on. Housing. That's where most of our financial economy is backed on. If people aren't paying their mortgages, then the banks are losing lots of money. Because as I said previously, and I think it was maybe 2 or 3 podcasts ago, you ever notice banks, they're big on credit cards, open a checking account shit, but it's always mortgages. Come in for a new mortgage loan, get a mortgage rate, get a mortgage HELOC loan. There's all these get a mortgage, best rates. And that's because those banks rely on those strong long-term loans for their numbers. So we watch housing as an indicator on that.
Yeah.
There you go.
So I think
Housing Markets 101.
you want to watch it as an indicator. I think it's slowing down, and I think I posted a Facebook status about this. I said I think the Federal Reserve should look at this and take this into consideration when during the next rate increase conversation. I think we should let the rates settle, man. Let them settle.
So I think you're absolutely right. I think we need to let the money go through the system, let everything work its kinks out right now, and we'll see how we look a year down the river. What would that do? Let me back it up real quick. We are almost positive that in December we're going to get another rate hike.
Bullshit.
Another 25 points. Well, it's common market thought right now.
Yeah.
Now, what would it do for our market if the Federal Reserve said we are going to leave rates unchanged? What do you think would happen to the market on that day?
You think it would go up?
I think that there would be a lot more comfortable. I think that there would be a nice pop. I don't know if it's going to be long term. I don't know if it would stick around. I don't think people would be too bullish on it, but I think it would pull some of that money off the sidelines, and I think we could see maybe a good 600 to 800 point pop on the Dow in the course of a week or so. I don't know. That could be me, but I feel like if they decided, hey, we're going to let everything run through the system, we're going to see how rates do at this rate because we don't want to adjust too high, and then we have a quote unquote responsible Fed. Then I think that would push prices up drastically. Well, stock market prices up. So I agree with you 100%. You pull that cord too fast, they're just going to have to start unwinding again. Set it back to zero. Set the chessboard.
So that's really it with news with me. That's just what I forgot last episode.
Dun 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 dun. All right. Well, I do have another market terminology for us today.
Ooh,
because it's always good to. I know I repeat myself, but when people talk to me about stocks, they say a lot of it is they don't understand the language of it, and so that's exactly why I do this, so that we take those words and you say, oh, that makes sense. Well, today's word is going to be a little bit for the more complex trader.
Ooh.
Not for everybody. Today's word is going to be, what is time decay?
Time decay.
Time decay is a fucking bitch is what it is.
Time
Dirty
decay,
fucking
also known as
bitch.
theta in the Greeks, is how much value is sucked out per day as the option becomes closer and closer to expiration. Because on that day of expiration, it is actually worth $0 if it is out of the money.
So can you do me a favor? Can you pull up an options chain? Let's do the Dow. Because it's our favorite.
S&P.
You want to do the Dow fucking Jones?
Yeah. My portfolio is being strangled, so I'm gonna try to. Don't look at it. I'm getting strangled hard.
So while you're pulling that up, yeah, that's exactly. Okay, yeah, that's cool. While I'm waiting for that to kind of see up.
Options, sorry.
So go ahead. Let's just say, so let's just call the stock price at 270, 250 right now. So let's look at the 275 call. I want to look at end of week, and then I want to look at 3 months and then a year. That premium price. So the first one at the 275 is $44. So 44-cent premium because it only has a day until expiration. It's got 1 day to make that movement. So we have a small premium because the likelihood is not very high. Therefore, it has a lower premium. And there's not a lot of time for the stock to get to 275. Now, can you pull up can you pull up January? The 275 call for January?
$7.61.
So now that premium is significantly higher because there is more time for that stock to get to $275. It has 3 months to get there. Well, yeah, about 3 months, 2.5 months to get
Two and a
there,
half months, yeah. 3 months. 2.5, 3 months.
to get to that price. So because of that longer time frame, it's got
More
more
likely to happen.
time. Bingo. There's more time premium added to that.
Do you notice the
So
difference in thetas?
I didn't catch the last one.
It was about 59 cents.
Oh, so like literally the entire premium. So real quick before we get into theta, if SPY does not move, if the S&P does not move from now until January, that premium come January will look a lot like the one that we just pulled up for November 2nd. Because of that time decay, there's less time for the stock to move. And that time decay works against people who are long options. It is not in their favor, and it works against them because you need price movement within a certain time. If you buy a stock, there is an infinite and undefined holding time on that stock, as long as the company doesn't go out of business. So, bringing it back, a measurement to kind of watch this time decay is theta. Nathan, can you walk us through the theta real quick?
Theta is it's not really like the other ones are kind of I think they're all kind of dollar amounts, but the
Yes.
theta is the amount of money that gets pulled out each day if it were to end out of the money.
Yeah,
At
yeah,
expiration.
the expected price loss from time decay each and every day is the theta. So the time decay on that January 18th one is a nickel on the premium every day. So about 6 cents every trading day. If it doesn't approach 275, it's going to lose approximately that. That's a rough estimate built on very complex formulas and very complex mathematics and algorithms and shit. So don't worry too much about its accuracy. Just know that that's a rough estimate. It's just one of those numbers that you take into consideration when you get the stock or when you get the option. I prefer to put time decay in my favor by selling options, but that's another podcast. That's another time to
Be a nerd.
yeah.
Got him.
You gotta love it. I love this shit. I love this shit, man. So take into account all those things. And yeah, time decay is the beauty and the bitch of call options.
Selling
Is
ice cubes.
time decay, and that's my favorite analogy for it. Is ice cubes. Do you want to sell ice cubes or do you want to buy the ice cubes? Most of the time, probably want to be the seller because slowly that ice cube is going to melt and it's not going to be an ice cube anymore. It's just going to be a puddle of water that'll sink away and evaporate.
You just walk away with the money.
You just walk away. Meanwhile, I kept the money for that ice cube. So that's for the options traders or people. It's for the options traders or for the people who would like to get into options but want to learn a little bit more. We actually have an entire series on that. There's a 4-episode series on options, calls, puts, spreads, and our favorites. So, that being said, if you have any questions, comments, concerns, suggestions, insults, or ideas, corrections, whatever, let us know. rebeltradinggroup@gmail.com. That's Rebel Trading Group with
we
2
have some comments coming in from the Twitch from Mr. Kyle. Would you like me to read them for you, and you can answer them and kind of respond to
I am
them?
going through. I'm going through. I do. Let's talk about his last point here. He says the Fed bank mandates don't care about the markets, only inflation and only employment.
That's sort of true because like they are very most definitely allowed to make comments on the markets. They've
Mhm.
Multiple chairmen before in the past have said that stock markets might seem overvaluated right now, and we've
Yeah.
heard that
Well,
recently. Although they don't
was
have to
it?
say that, but that's just what they see. They have a little bit of fiduciary responsibility.
Didn't Greenspan and called the tech bubble irrational exuberance?
Yeah.
Yeah. And I mean, we see that today to an extent. And you're right, the Federal Reserve, they're not really supposed to, because the Federal Reserve cannot own equities. It's for the sake of holding back. It's unconstitutional or immoral or wrong for the Federal Reserve to take part in federal or in private equities. They're not allowed to be part of the free enterprise system. It's separation of government and business. It's like in the Constitution. You can probably pinpoint that amendment, right?
What? Federal
The
Reserve?
that
I might be able to.
the government cannot be involved in, like how the government can't own pieces of Coca-Cola.
Sure.
So
They can have
unless
contracts, but they can't have like ownerships and stuff.
correct, they cannot take, and because that's just wrong. So the Federal Reserve does not necessarily look, well, the stock market's going up, so we're going to turn up rates. No, they take it as a very small piece of their indicator.
Yeah.
Say it's a very small piece. They do watch it because it does represent financial health and financial sentiment among the American population. If the market just keeps going up and it seems to be warranted,
Overvaluated.
well, if it's warranted, then that's gonna put that in their mind and be like, hey, the economy's booming right now. Investment, more people are investing money. Everything's good. It might be an indicator to slow things down, and vice versa. If the markets are just going down and wealth is getting destroyed, people are losing homes, jobs, the Federal Reserve will also take that into account. But I think Mr. Kyle is absolutely right when he says that they look primarily at inflation. That's their number one goal. It's why it's why the Federal Reserve exists, quote unquote. To control inflation. They were created after the financial crash and the Great Depression in 22, was it 25, whatever it was, and they were built so that this would never happen again. And they also look at employment rates, the jobs numbers. That's very important.
Yeah.
More people working, better economy.
You want to talk about his other points real quick? We don't have to ramble on, man.
Oh yeah, good. You're good.
Okay. Interest rates at West Avenue home builder performance over the past year is down significantly. That's kind of what I was kind of hinting at, with definitely home prices slowing down. And he says a 2% rate alone would kill housing demand. I don't know about that, but I could definitely see it. I don't know if that's. I wouldn't put a fucking hammer in the nail at 2%.
Yeah, 2% in my opinion is not bad.
It's not.
I say if you're getting under 4, you're good.
I think you're getting there though. I think we're getting there. I think you start pumping the brakes, but and he says valuations go up because banks continue to approve higher loans. Yes, we definitely see that. We definitely saw that in 2008. So you're seeing blood and these warning signals. You guys definitely should be identifying these warning signals, getting prepared, getting cash positions ready, getting ready for this bloodbath of a recession that could possibly be in the next within 10 years.
And try not to time it.
Inherently inflationatory. Yeah, good point. All right. So if you have any other questions, feel free to email us at rebeltradinggroup@gmail.com. Hit us up on YouTube. Look us up at we're under YouTube at Rebel Trading Group. That's where all of our video archives are. And let's get on with it, bro.
All right, let's move on with it. Hey, if you can, I hate to do this, but I need to get a charger because we're doing a 2-episoder today. If you can give me if you can just give me 60 seconds so I can run and get a charger.
Wage growth should be focused. I don't know if anything should be primarily a focus rather than a more of an indicator and as a big pot, like a big stew of things as what they should really ultimately think. I think if something like wage growth was to go some volatile direction, yeah, I think they should look at that, and I think it should be a focus. I think that certain indicators have certain time frames for time specialties, I guess. time-specific events, like if it's going too high or too low, then it should be a focus. And maybe you're right. Wage growth should be focused. That's a good point. Thanks for joining us, by the way, Mr. Kyle.
All right.
I just talked a little bit about wage growth. He said wage growth should be focused. I said, well, maybe it should be, but I think it shouldn't be always the focus. I think maybe if it's stagnant or stagnant, or it's lagging, maybe it should be an indicator. If it's too high, maybe it should be an indicator. I think certain things have for certain events that it should be a red flag and say, hey, we should look at this.
I do like that he puts that it legitimizes the bull market, because if more people are making more money and they're investing it,
then it should be going up.
Absolutely. But when Americans make more money, they don't invest it, dude. They fucking spend it.
Yeah.
That's the problem. So you got to be on the proper side of it. Got to be on the proper side of all this. So let's jump into it. What did we decide on? Did we decide on consumer staples today? XLP, consumer staples. Another one of my favorite sectors, but not in my top 3. So we're going to jump into that. So, first of all, XLP is the sector ETF of the Consumer Staples Index. What is consumer staples?
I'll read it. I'll read what they do. Consumer staples. That doesn't say. I don't know, man. What is consumer staples?
Well, the best way to put it is that consumer staples are those goods that we kind of need on the everyday. So think some of your food and beverage stocks. We have stocks like Procter & Gamble that make toilet paper, toothpaste, rubber gloves, companies of that sort. Clorox is in there. Colgate Palmolive. You know, those kinds of things. The things that you find in your pantry, maybe even in your medicine cabinet. Those kinds of things. So, that being said, I think, if I'm not mistaken, right off the top of my head, Procter & Gamble is the number 1 of that sector. I think it's like 10% of the holdings. Who else is in there? We have Coca-Cola, believe it or not. Pepsi with the Frito-Lay division, so they're food and beverage. Like I said, you have Colgate, Palmolive, and Clorox. Tobacco companies, believe it or not. Alcohol are also in there. I see on the Twits you're pulling up, or Twitch. I always confuse the Twits and the Twitch.
The Twits and the Twitch. Did you tweet us out?
I did.
Procter & Gamble coming in hot at 13%. Right behind them, Coca-Cola, Pepsi, Walmart, Philip Morris. Wow, that's an interesting one.
Yep, Philip Morris is in there. Well, Costco.
That's cigarettes, isn't it? Philip Morris.
Philip Morris, yeah, cigarettes. Their biggest brand is Marlboro.
Dow Jones player, Walgreens Boot Alliance.
Mm-hmm.
I like to say that now.
We have Kraft, Constellation, so alcohol, makeup, Estee Lauder.
Constellation is also doing marijuana stuff.
Yeah, I believe that's going to be a staple. Cisco, the food transportation company, General Mills,
Kroger. Here we go.
Kellogg, Campbell's Soup. See, so a lot of, you kind of seeing the theme here. A lot of stuff that we kind of use every day, and you don't really think too much about it. But go ahead and let's pull up the top holding, Procter & Gamble. It's one of my stocks for my dream portfolio. That dream portfolio I always talk about. That's something I'd like to have a good 5 to 6, I'd say about 8% position in. Because similar to utilities, this is a safer area to hang out during a recession, especially Procter & Gamble. Makes like Charmin. Oh my God, they have so many brands. I'm not even going to begin to name them. But next time you take a shower or you're taking a shit, look at all the things in your bathroom and look at the label on the back. You'll find that it's mostly Colgate Palmolive, Procter and Gamble, or Johnson and Johnson. So this is a good place to hang out in a recession because when money is tight, people are going to buy toilet paper. They're going to get toothpaste. They're going to get cigarettes, that's for sure. They're still going to play the fucking lottery and buy cigarettes and alcohol and beer. They're going to drink Coca-Colas. They're going to go out to restaurants. They're going to buy candy. It's still going to happen. So what comes along, if we're starting to notice a theme, some of these less cyclical areas, what's a theme we kind of notice there?
Dividends.
Bingo. Very good, Nathan.
Thank you.
We noticed that there's good dividends here, just like utilities, just like real estate. This is another one of those areas that doesn't really grow all too much. Yeah, it has room to get new divisions and maybe they buy somebody. I know Unilever, another big player in that area.
Unilever.
I think they might not be listed there because they're an ADR. They're a foreign company. I could be wrong, but they weren't in the top holdings. They are a huge company too. Where was I going with that? That threw me off. Now that I didn't think about it. Yeah, they bingo. They don't really grow. Unilever purchased Dollar Shave Club a few years back for like I think it was like 13 billion or something like that. Dude, it was massive. Dude, it was massive. Something like that. They saw potential. I could be wrong. It could be like 3 billion. I don't know. Talking out my ass here.
We could have fucking made millions, man.
Yeah, dude. For such a simple business models are the future. Simple business model with subscription, no hidden fees. That's the future. So I think that's why they saw that potential in Dollar Shave Club. So these are good places to hang out in recessions, kind of suck down the dividend. You will get hit during a recession though. Because in a recession we know equities are going to sell off. So of course you got to remember it's going to fall. It's probably not. It's going to be a lot less than some of the others. But meanwhile, you're going to have good dividends. All of these have just been strong dividend payers for years and years and years and years, and are what I would label as recession-proof.
Recession-proof, defensive stocks.
These are very defensive. This is almost as defensive as it gets. Utilities and staples. Just about as defensive as it gets before you change asset classes and go into precious metals, commodities, bonds, that kind of shit. This is about as, I guess, solid as it gets. Well, there's one of those more solid sectors.
Less risky, I guess you could say.
Yeah. So I like it because I like a lot of the companies in it. I love Coca-Cola. Although I think I would also own a position in Coca-Cola. I would own some of these companies rather than the fund itself. But if you don't like picking stocks, it's not for you. I like Coca-Cola. They're very well efficiently run company. PepsiCo is they're pushing growth and they're actually doing pretty well with it by getting out of sugary soft drinks and into healthier drinks and expanding their food areas. I think that they're doing well. Coca-Cola having a day, 48.
Mm-hmm.
Dude, go to a 5-year. Ever since I started trading, she just hasn't really done much.
Been consistent growth.
Yeah, I mean it's gone up. I think I first bought her. It was like $42 was like the first time I ever bought. And then, but it's paid the dividend. Yeah. I think it's raised it since then.
Yeah, dividend queen.
So slowly but surely. It's a very well-run business. That's something that I would own a straight-up dividend reinvestment plan on. Like I would put 100% of my portfolio in, and just load the fuck up on Coca-Cola, suck down the dividend, sell the calls, and just repeat for years. I played
calls on Coca-Cola like a fool.
See, she's not a mover. She doesn't move. She
Doesn't
doesn't.
move like that. I do
Need.
cover calls on her for sure. That's how
Oh
cover
yeah,
calls fucking on the fucking month.
good. Yeah, absolutely.
Every
That's a
month.
good. You could generate good income off of KO calls.
Yeah.
We like a knockout. Ching 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 ching.
Jesus.
So
That's what I'm trying to do with store capital.
good cover call strategy.
Yeah.
Would you sell out of the money calls trying to generate income?
Yeah. Of course I would. And collect the dividends on the side.
Mm,
Hello.
let's go.
Let's do
So anyway,
it.
so what are you doing with XLP here?
I'm not buying a lot. I don't know. The companies are great and all. But like, if we're gonna compare between like XLU and XLP, I'd definitely rather own XLU during a recession. Because like either way, these companies, people are gonna start pinching their penny, and they still are gonna get hit by the recession. But I think XLU might get hit less.
Absolutely.
So I'd hold it. I wouldn't hold too much. You know, I like it. It's got good companies. Walmart's in there. I love Walmart.
I can get excited about if there was a good 10% pullback in XLP, I could get excited about that because a lot of these companies I would like to hold for 20 plus years. Coca-Cola, of course, I'm not even going to talk about that anymore. But just like I said with Procter and Gamble, Walmart has a lot of growth opportunity. I think that they have what it takes to take on Amazon. I truly do. Who noticed Amazon isn't in this sector? I feel like that could be a change, but whatever. Um, I just I don't hate these companies. A lot of them are just big time corporate conglomerates with global impacts. So I could get excited on a pullback.
Conglomerates.
Conglomerates, bro.
Coke
You
versus
know,
Pepsi. Who are you buying?
Coca-Cola. I think Pepsi has more growth potential, but I just like the name of Coca-Cola
You
more, and
brought
I
you
like.
brought up you brought up it you brought something up to me one time, and it was who gets a fucking Pepsi and Jack?
Yeah, there you go. Dude, I will not drink liquor at any restaurant or bar that has Pepsi products. That's unless I'm getting a club soda or something. I won't do a Sierra Mist and vodka. No. I won't do a Captain and Pepsi.
Get the
What? What are
fuck
you
out of my
doing?
store.
A Captain and no, you need a rum and Coke, bro. You need a rum and Coke. You need a Jack and Coke. And
Rum and
it
Pepsi.
literally has a completely different taste and palate to it. So the thing I like about Pepsi is the Mountain Dew cult.
The thing I
It's a
love about
fucking
Pepsi
cult.
is they have a diverse like lineup. I mean, so does Coca Cola as well, but
Pepsi has Doritos. Remember, they have the whole Frito Lay division, so
nice.
they have some pretty good chips out there. They have a good partnership with Taco Bell that I think runs very strong with millennials. With those
I
like,
love Taco Bell. I love Yum.
oh, dude, let's talk about Taco Bell real quick. I love them as a company. I was talking about this the other day. Like, think of their margins. Like, everything is like some sort of tortilla with cheese, lettuce, tomato. It's just all cooked and prepared differently and priced differently.
Okay.
So they took some cheap, very simple products and they put them out front. Think of Mountain Dew. They have those like Mountain Dew slushies for $1. Say, hey, we've already got all this shit laying around. We can just change the menu items so much that we can have a ton of different products with just a few different tools, and we can make these cheap drinks and we can sell them for like $1 during happy hour. We've already got the soda, we've got the ice, we can just whip it up together and feature it. And they took the Doritos and all that, and they took these very cheap, very popular items, and they made a fucking craze out of it. And then they value it $5. You can fill up. You can get 2 tacos, a burrito, chips and
Food
nachos,
tacos,
and a drink
burrito
for $5.
in a box.
I think it's a very well run business. Granted, when you go and the experience may not be the best because the workers and the
We got a
history of
comment
just
here. We
fast
got a
food.
comment coming in from Mr.
But
Kyle again. Hello, Mr. Kyle. And again, thank you for joining the Rebel Trading Group podcast. Mr. Kyle says Pepsi buys food to acquire those businesses to sell only their drinks. No one wants Doritos with the chalupas. I mean, well, you have things like Doritos Locos Tacos too and stuff like that. Other kind of
Yeah.
like combos that Pepsi kind of like dishes up. That's a good point.
Mm-hmm.
Thank you for that. And it does make a good point. I don't know. I don't know, but I think it's hilarious when you first told me who drinks a fucking Pepsi and Jack. I lost my shit. I like
Oh, it
Coke better
bothers.
in the drink sphere. I like Coke better. I like them both. I like both companies. Shit, buy them both.
I like them both. I think Coca-Cola has more stability to it. It's also got a better dividend than Pepsi. So
Who's
I
got the
don't
better
hate.
dividend? It's a different price too.
Yeah, Pepsi's like what, close to 110 or some shit.
3.23 dividend on a $48 stock. Are they both in the Dow?
I know Pepsi is.
Coca-Cola is.
Well, then there you go.
2.64% dividend on a $112 stock. Wow.
We have a friend in common whose father works in the restaurant industry, and very smart man that I look up to, and he always told me that no matter how hard a recession hits, people will always go to a restaurant and they will always order a Coke.
Yeah.
Like no matter how, I mean, it's got to be so bad for you to just never be able to scrounge up the money to go to Crystals or something, and get a soda. So when money's tight and you're like, okay, I got a meal, I got $8 for it, I'm gonna get, I can go here and I can get a large Coke. So I think, and
Is
also
it?
working in restaurants right now, like the restaurant I work, I pour so much Coca-Cola every day, dude. Like I shit you not when I say I must pour over 70 gallons of Coca-Cola a day. And I
Yeah.
wish I was making that up.
Well,
I
it's a
wish I was
lot.
exaggerating.
It's a lot of Coke, man.
Yeah, we change out them fucking things every day. We have 4 dispensers of it, just Coca-Cola alone.
You're a Coke dispenser.
Pretty much. I'm a human drink dispenser. So that's just why I like it. So
Coke's easier to accumulate.
because it's cheaper.
Yeah.
Yeah.
And you get a
At the
better
end of the day,
dividend.
it does. Yeah. It's better for looking 20, 25 years. Hands down, Coca-Cola.
Yeah, for sure, dude. Buy Coke now, man.
All right. Anything else you want to add?
I don't know, man. Consumer Staples is cool and all. We have another comment here. You want to read it?
Yeah, the KO's diet drink failure after failure over the years.
You're reading
And
it
that's true.
backwards.
Which one?
You're reading it backwards.
Coke is king, but Americans want sparkling water. That's true. That's actually, that's where I'm at. That's all I drink. I'm drinking that right now as we speak. I drink fizzy water with a lime. Soda Stream, actually. Which, by the way, just
SODA.
just got bought by Pepsi a couple weeks ago.
Really?
Yeah, dude, for a lot. Google it. Pull it up on the Googs. Put Pepsi buys Soda Stream. 3 year on Fizz. Yeah, I mean, Coca-Cola's diet drink failure. Yeah, they did a lot of shit with like the Splenda and the Coca-Cola Life. And to be honest, that stuff has such low margins for them that it's kind of worth a shot. And of course, some of it lands, some of it doesn't. And it eventually gets pulled, but Diet Coke is very strong. It's like, how many people go through the drive-through and they need a large fry and a large Diet Coke? A large Diet Coke. It's just fucking everywhere. Like it's almost as common as Coca-Cola, at least here in the United States. Outside of the United States, it's actually called Coca-Cola Light.
Gross.
Yeah, actually, it tastes different too, but that's besides the story. It's kind of a fad here in America to drink the diet drinks because there's like no guilt to it, quote unquote, when it's just more chemicals at the end of the day and tastes horrible.
What drinks does Fizz make?
I don't know.
Ritz. Oh, I've seen Ritz. We sell Ritz. Fagos. LaCroix. Oh my God. Yeah, this is
sparkling
definitely
water.
a place to buy.
Yeah, this is more of a it's more like sparkling water.
Okay.
4 billion market cap. Oh,
They don't
did you?
have a
Were you able to
dividend
pull
though.
up
They don't pay a dividend. Fuck you.
That's all.
I'm
It's
not
all.
buying that.
It's all gross.
Yeah. Put some divvies on there. I might buy it.
You said it's called Coca-Cola Light because only fat people are on a diet. That's funny.
What the fuck?
True.
All right. You want to wrap this one up? Make it a short episode?
Let's wrap it up, man.
All right. You want to do? Are you watching anything out of this? Are you watching anything out of this sector?
Out of this sector particularly, ooh. Pull up Philip Morris real quick.
I got you. What's that? PMI?
PM.
PM. Yeah, here's the 3 month. 3 months looking good. 1 year's looking like buyish range.
I know there was a large drop a little while ago.
Yeah,
Well,
back
there's
in
see that
April.
wall just. What's it for the year? Down
Yep.
11%, something like that.
Yep.
A solid dividend. Yeah, less people are smoking, but I feel like they will branch into the cannabis industry. Oh, can we talk about that real quick?
Yeah, we can talk about that, man.
I think we did say something about that. Cannabis will be the future. Like that's just straight up. Like it's 100% legal in Canada. I was actually listening to a podcast earlier, and there's like, you know how when you go to the airport or like a Disney World or something, and in the bathroom they have like the sharps bins
Yeah.
for like diabetics and people who need to um, shoot their medications.
Yeah. Amnesty
They have that.
boxes.
There you go, amnesty. That's what it is. They have an amnesty box. It's like joint. It's like right next to it. It's for all your joints, blunts, like all the tubes that you purchased in the packaging. It's like right next to the trash can.
Yeah.
And it's like right there in the airport. Like, oh, did you bring your joint on the plane? And did you bring your butts on the plane with you? Because you can put them out here.
So are you gonna buy MJ the ETF?
I would rather go with a large blue chip company who is taking stake in other marijuana industries. I would rather do it indirectly rather than directly. Does that make sense?
Yeah.
So if Philip Morris, which I'm sure they will if they haven't disclosed it, I don't know what's going on. I'd have to research. I'm sure Philip Morris and Budweiser, we've already seen it with Constellation Brands. I think they're going to push into the cannabis industry. I think they're going to have to. I think there's no fighting it, to be honest, because they have the distribution channels, they have the buying power, they have the name brand. Imagine just being able to walk in the gas station. Can I get a pack of the Marlboro Greens, please?
Marble
It's
Greens.
just nice, sealed, beautiful little package of pre-rolled J's. I think that's I think that's the future. And I think that in the end, pharmaceutical companies, alcohol companies, and tobacco companies will benefit from this the most.
Okay.
And some of the little guys are going to be winners. They're going to be big winners. But I don't want to pick them out because there's a lot of them. I don't trust a lot of them, man. I just, because I don't see it. I'm not immersed in that industry. I don't see it because I live in Florida where it's illegal. Fuck, the whole East Coast is illegal. So I don't see it, touch it.
So I'm watching P&G. Nothing special out of this group, but just
Procter
P&G.
and Gamble.
Yeah.
She's so strong.
Powerhouse.
Just a powerhouse. Nice ladder up. So,
Buy some right now. I'm gonna do it.
well, you ain't about it.
I'm about to do it right now.
You ain't about it.
I'm gonna do it live on TV right now. I'm gonna do it live on TV right now. Don't talk to me like that, like I don't buy like what I want when I want it. It's at a really high point right now.
Yeah, I think because a lot of people are flowing into these stocks already. She already pushed up for the day. Wow.
It's pushed up during October when everything else is going down.
Goes to show you. Goes to show you.
I'm gonna buy one
What?
right now. Say I won't do it.
Oh, you won't do it.
I'm doing it right now.
Show us that order execution on.
I'm gonna do it right now.
Do it for the Twitch.
Don't look at my password. Don't look at my password. Don't look at my password. I'm gonna do it right now. Bot. See, there it is. Let's go. In stream.
Oh, it went down.
Oh, sell! I gotta sell it now.
You're already down 2 cents, bro.
Oh, sell it.
3 cents. Oh my God.
Sell it all. It's gonna happen overnight.
4 cents. Oh my God.
Get rid of it. Get it out of my account.
You know what we should do? We should tell each other when we're buying and selling something, because one of us is always going to be wrong. So like if I'm like, hey, I'm going to buy some Ford today. Buy some at the money puts right there because it's going the fuck down. And then when you're like, hey, I'm going to buy some Procter & Gamble, I'll buy some fucking puts. All right, I'm shorting it. I got you covered. I'm your insurance.
Thanks, bud. I want to be at the top of this candlestick right here. It's going to be me.
It's even going to have a dot that says Nathan.
RTG stamp.
That's
all right,
funny.
man. Let's end this. Let's go ahead and end this. Thank
All
you
right,
guys
man.
for
If you have
joining
any,
us. If you guys have any
questions?
questions, go ahead, Jason. Sign us out. I signed us out last time.
All right. If you have any questions, comments, concerns, suggestions, insults, ideas, corrections? Did I say corrections? Email us, rebeltradinggroup@gmail.com. We are on Twitch, SoundCloud, YouTube. I can't say that, express that enough. YouTube has everything that we've ever done. This is episode 49. The other 47 are there, 48, 49, and we'll be there by end of day. Everything we've done is on YouTube. You can get at us on Facebook. Email us, whatever. Just get to us. We're at StockTwits. Check it every day. So, we love you guys. Thanks for listening. I hope everybody has a good trading week. We have a special treat for you on Monday. We will be doing our live episode together. And fun little announcement during that we'll have. And it'll be our 50th episode.
We might have some special guests. We'll see.
Maybe. That could be fun. We'll see. All right, man. Well, good luck to you. I hope the volatility gods are in your favor.
Same, dude. Same.
So I'm just kind of I'm looking for upward movement at this point.
If anything, it's gotta go.
I'm tired of the selling. And if we're gonna go down, I feel like we're gonna go down a few more stories. It's not. I don't think we're gonna sink down. I think we're gonna. So I'm watching. Be careful out there. Walk softly, but carry a big dick.
Shut up and sit down.